stop short. That's mine, actually. That's mine, yeah. I just thought, just in case.
Where would we be without our sponsors in 2022? So thank you very much to everyone coming on board for the roundup for 2022. Great to see you all here after lunch. I brought my lunch in with me today after suggesting to you that it would be a good idea yesterday. I thought, bugger it, I'll bring my lunch and I'll sit back and I will enjoy the next 7 presentations with potential upside to my investment portfolio, starting with this gentleman here in front of us. He's done some pretty amazing things recently for Zenith Minerals. This is Mr. Michael Clifford, Chief Executive Officer. So in addition to its lithium assets at Split Rocks and Waratah, well, part of the Zenith Lithium joint venture with EV Metals Groups, Zenith has a portfolio of gold-based metal assets in Dublin. Actually, I could keep going on, and I'm not going to, because you want your whole 15 minutes. Would you put your hands together, please, ladies and gentlemen, for Zenith Minerals and Mr. Michael Clifford.
Thanks very much, Chrissy, and thanks to the RIU team for putting on another fantastic event. And thanks to all of you who've stayed through to the final session, and hopefully you've enjoyed the last few days. So Zenith is an Australian-based mining company. We've got assets in Western Australia and Queensland. We're firmly focused in Australia. Zenith, as a lot of you may have known us, late last year, pre-Christmas, was all about our copper and gold assets. A barbecue, an introduction to a group that is associated with Saudis and access to a lot of petro-capital dollars was fortuitous post-Christmas and resulted in us signing a transformational joint venture with the EV Metals Group. And that has refocused a lot of our efforts, particularly in Western Australia, on 2 key projects, and is driving the business forward with massive investment into exploration on that part of the portfolio. Meanwhile, we are also not throwing the baby out with the bathwater in terms of our copper and gold assets. We've made a decision to push these into a new entity, and I'll talk a little bit more about that shortly, and demerge those assets, and shareholders in Zenith will benefit from an in-specie distribution of shares in that new company. Where we're sitting, oops, jump one too much. Where we're sitting at the moment, we've got a market capitalisation of around 150 million. We're in probably one of the best positions we've been in for many years in terms of having cash of 9.3 million. And in addition, along the way, when we see ground we like, we always grab it. We always pick it up Through our network, then we've done a number of transactions, and via those transactions, we've taken stock in various companies. And that stock for us, those equities are worth 14.2 on last counting. So it puts us in an enviable position to have access to capital to drive our assets forward. We've had a decent looking share price graph. When I got involved in the business about 7 years ago, the company was worth about 9 million in market capitalisation. I think the share price was down around 5 cents. So it took a bit of time to get where we are now. And I think we're only still on the start of our journey on where we want to take this company. And we're going to do it now in conjunction with our new partner, EV Metals, both on lithium and also on the copper, gold and other base metal assets. And how are we going to do that? Well, it starts with the lithium, and we'll talk about that portion first. EV Metals are coming in and are going to free carry us on 2 of our lithium assets. That's Split Rocks, which sits just to the north of Mount Holland. And for those of you who don't know, Mount Holland is probably one of the in the top 4 lithium deposits in the world that Wesfarmers and SQM are going to put into production. And they're doing that. Construction has started. Waratah Well is another one of our assets. It's closer up to, sits between the towns of Mount Magnet and Geraldton. Beautifully located in terms of infrastructure. And we've been drilling on that recently. We've just completed some heritage surveys and we'll have further action on that one, as well as massive drill programs on Split Rocks, which I'll detail shortly. The other thing that having EV Metals Group behind us and significant dollars and power with this group is that we can look at new opportunities. And it's not something that I can sit down here or stand here and tell you about today, but we're running the ruler over a number of opportunities. We're very mindful that a lot of those lithium opportunities are overpriced at the moment. But we see a number of angles to look at getting new ground and new lithium projects into our business with a key focus on Western Australia. The demerger of the gold and base metal assets, this is essentially the old Zenith Minerals or pre-Christmas. We had a market capitalisation of that company at that point in time of $80 million. And if you look at the see-through value of just one of the assets within that, and that's the Arahidi joint venture. So that is a major zinc discovery that our partner Rumble Resources has made. We have a 25% free carry to the end of a bankable feasibility study. Last year, I think they put in the order of $16 million into the ground. I think they're planning another $20 million this year. And we don't have to put any capital into that project at the moment. So that'll be a continued drill program at Arahidi throughout this year with, I think, 4 rigs running. Lots of metallurgical test work undergoing as well. And they're planning for a maiden resource estimate at this point in time, early next year. So the value of our 25% is about $80 million on a see-through valuation. So you can see there's a hell of a lot of value that sits within that small portion of the portfolio. In addition, we have assets including Devlin Creek Copper, which is near Rockhampton in Queensland. Split Rocks Gold, we've just finished a 50-hole drilling RC program and waiting on assays, and we'll be telling the market more about those if they ever come out of the lab. We've got Red Mountain, a stunning target, breccia pipe system, also in Queensland. It was a virgin discovery by our team. And a series of other assets, including Corowa, Privateer and Auburn. So the plan is to demerge those. I think the timeline at this point is to do that in the second half of this year. Once we can secure a MD or CEO for that company. And if there's anyone here who wants to put their hand up, come and see me afterwards. We've got one gentleman, very good. But that's actually holding us up at the moment. And this is not getting rid of some scraps. This is a portfolio that took us 7 years to put together. And we really want to see that portion of the business do very, very well. So shareholders in Zenith, once that demerger is completed, will end up with free stock. We're looking at getting it very well financed. We're putting across some cash from Zenith. Our partner in VV Metals have said, look, we'll chip in 2.5 million. In fact, they said they'd put in 3.1 million. They'll underwrite priority entitlement to Zenith shareholders to the tune of 2.5. And we've got a Western Australian broker that's prepared to find another 2.5. So that'll have 10 million in cash. We'll put across some of those equities. And so in its own right, that vehicle will be very well financed to push those assets forward. In terms of EVM, who are they? You can go and Google them and you'll find not very much. They're a private group. They're backed by Saudi money. They're UK registered. And I guess when some of my team said to me, you need to go and have a chat with these guys, it was literally chat with who? And it wasn't until I went down to their offices and had a tour of the second floor and saw 70 engineers sitting behind their computers designing up and in the final, or in the stages of putting together the lithium hydroxide monohydrate plant that they're going to build in the port city of Yanbu in Saudi, that I started to believe these guys and understand that they're a serious group. And they are positioning themselves to take supply from lithium spodumene producers in Western Australia, refine that in Saudi, and then look at markets in Europe and then the Americas. And they see themselves as a viable alternative supply to the usual route that spodumene goes, and that's straight north to the Asian countries. Our joint venture, so we have a 40% free interest, which is essentially all the way through to production. If we choose to, they'll also finance the capital associated with the project, and then we would repay that of any profits going forward. So again, with these two projects, the exploration activities and what we're doing on these, we don't actually have to put any capital in. And so they're going to spend a minimum of $7 million before they walk away. And that's the commitment they've made to us to tell us they're serious. In addition, they put 6 million capital into Zenith. And so they have a vested interest to see that this goes very, very well. But in building and having a commitment to build a lithium hydroxide plant in Saudi, they know that they need that material fast. And so we've got the drill rigs running. We are phenomenally busy. They're rushing assays through and are prepared to pay double price for some of our lithium drill assays at the moment to get ahead of the market. And why did they choose us? There's a number of other players with sort of more advanced assets, no doubt. But they did come to us and sort of say, look, we like this package of rocks. We like this ground that sits near one of the largest deposits in the world. And they said to us, you know, what have you done there? And frankly, on the lithium side, we haven't done that much. And they've taken a really big company approach. They're saying, look, we want full geochem coverage, start in the top right, finish in the bottom left, get 100% coverage from a geochem point of view, and let's get the rigs running. And so the second hole that we drilled up at Rio intersected 20 meters at 1% lithia, including 10 meters at 1.7. So, you know, any of the explorationists in here, you're going to be pretty happy with your second hole turning up all grade intersections. We are focused and exploring on a 10-kilometre strip that extends throughout the northeast portion of our portfolio. And we're getting pegmatites up to 111 metres in thickness. We have some assays for some of those, still assays pending for others. But this will be a focus area for the joint venture. EVM have committed to an immediate follow-up of another 50 holes. We're getting heritage clearances and botanical clearances to allow that to proceed. And we expect to have the rig running late this month again. In terms of the intersections, you can see there where we've intersected the ore grade intersections, and that was on a very broad spaced drill line. We stepped south 400 metres. We started drilling at 200 metre spaced holes. So the obvious thing is infill and the extensional drilling around this intersection. And this form that it's taking is so classic of what we see down at Mount Holland of branching, large-scale flat-lying pegmatites. We believe we've got the absolute right sort of chemistry here, and we need to just keep the drill rigs running. We touched on the geochem, the blue and the grey are the areas that have been completed to date. I think we've got 3,000 soil samples in at the lab and we're waiting on those assays. You can see that the auger rig with the chap standing looking skyward there, that machine costs about $3,000 a day. We've got a couple of those running and a couple of other soil crews as well. So, you know, it's a decent commitment. We can see that EVM are wanting to push this fast. Waratah well, look, I'll just touch on this one briefly, but we have a 3 by 2 kilometre LCT field full of tantalum-rich dikes. You can see one of our geos, Alan, there standing on one of those pegmatite dikes. We started with a very broad brush program here of 1 kilometre spaced holes to look at zonation. Saw something that we liked through the centre of the zone, and we're going to now extend and chase this pegmatite swarm undercover to the north and see how the zonation changes. I probably won't go through the copper and gold portion of the portfolio, but just have a look in the bottom of these slides and see how many rigs are running. We've got 4 going up at Erahidi. We've just finished with 2 rigs at Devlin Creek. On the gold front, we've had a rig running on the, and I said, waiting on assays for 50 holes. Targets lined up at Red Mountain and Quarra as well. So lots of action and lots of activity on this portfolio later in the year once we complete that spin out. So I guess for us, yes, we're diversified, but pushing towards getting the portfolio split into a clean lithium vehicle, into a copper-based metals vehicle, and driving that forward in conjunction with our partner EVM.
Michael, thank you for kicking off our first session. It sounds a bit weird, but I'm just going to say to you while you're in the room, and for those of you listening at home, I don't jump up and say thank you straight away, because we like to edit at the end of what you're doing so that you can have all those talks later on. And my voice going over the top of our presenter's voice is pretty annoying, I've been told. And my husband tells me that quite often as well. But nevertheless, that's why you've got this funny pause where I wait and then I say thank you. So please don't think I'm as strange as you think that I really am. But thank you very much. You're very calm for a man that has so much on the go.
Great. Thanks very much, Chris.
That's all right. Thanks, Michael. Thank you so much. All right, number 2. Shannan Bamforth is coming to join us on behalf of Codrus Minerals. Now, they are an emerging gold and base metals explorer with projects that are located throughout Western Australia and also the Bull Run project in USA. What else would you call it? They've been advancing their projects very rapidly since they listed back in June of last year. As I said, this is their MD. His name is Shannan Bamforth, and he's here to provide an update on their progress since listing and what's in store in 22 and into the future. Please make him welcome.
Thanks, Chrissy, and just commence by again thanking RIU for putting on a wonderful event over the last couple of days, and to the sponsors for making it all to be possible. And to congratulate all of the investors and the people that have actually sat through up to 90 presentations over the last couple of days. There's only 5 to go, so you're almost there. What you've seen over the last 3 days is presentations that have covered pretty much every jurisdiction in Australia. I think with Canberra sort of skipping a little bit, but everywhere else you've visited. You've been overseas from Mauritania to Mali to Sweden to Nevada to Argentina. So it's really Mongolia. It's a global group of companies that you've got here and group of projects. So you've been on a bit of a journey, and the themes that you've covered quite heavily in this conference has really been on the battery metals, the electric vehicles, anode, cathode, anode precursor. But there's still the good old gold, and it's a wonderful story, and it's not dead yet. But you're all here as investors, and without you guys, our industry doesn't turn. So we need you guys to be on board and really up to speed with what it is that we're doing and how we can create value for you. I guarantee that every investor here is really looking for one thing, and that's return on their investment. And you do that in a very simple fashion. That's by finding good projects with good people and investing in the projects that are currently heavily undervalued. So Codrus, newly listed in June last year. We raised $8 million and had a great start with exploration rigs starting to turn last year. Like many people have alluded to over the last 3 days, drill rigs and assay turnaround has been the bane of our existence. The news flow that we'd like to get to you as our investors isn't as fast as we would like, And we really hope to see that change in the coming 12 to 18 months as the industry returns to a steady state post the COVID pandemic and lockdowns and border closures. Codrus is made up of 4 key projects, 3 in Western Australia and 1 over in the US. The 3 in Western Australia are clearly marked by being a little bit different in terms that they are all close to existing operating processing facilities, which is a key. So we don't need to be a large standalone project, and a small asset will never be caught stranded. At each of the projects in Western Australia, we've got active exploration programs occurring, and we're kicking off in our Bull Run project in Oregon, in the US, now that the snow's starting to melt off the mountains and we can get back on the ground. So we've got a strong cash balance, we've got a dedicated team, we've got a low cash burn rate, and the money goes into the ground. We've got an attractive capital structure with Blackstone Minerals holding 45 million shares, or about 40 million shares, or about 46% of the company. And it's another part of that capital structure that's very interesting. As board and management bought in at the IPO, there was no freebies, no cheapies. So everybody's set at the same level. If you're in at the IPO, you're in at the same level as management. The key drill program that we released a little bit earlier this year was the Red Gate drill program at Edgedina, about 140 kilometres north of Kalgoorlie. For a maiden program, we were very excited to have 23 metres at just under 4 grams a tonne, intersected fairly close to surface in our Porphyry West project. And we think this is an area that's going to actually come into its own light in the coming months to year. We're in a very hot area. We've got Northern Star with the Porphyry mine, they're mining there. Some of you may have listened into the Nexus talk. They've got their Crusader and Templar projects there. So as we start to look through that corridor, I think it's easy to see that there is an exploration opportunity there that's going to be in excess of 2 million ounces that is still very poorly explored. So we're moving our way through into the next drill program. We have a rig there in the next 2 weeks. We've been able to go from an embryonic idea of what's going on geologically in our first program to really starting to put some colour and context to the geology, structure and the location of the mineralisation. The original holes at Porphyry West, we had the nice mineralisation in. You can see it's quite shallow. And what we're looking at isn't to try and follow these things straight down dip. It's actually on the plunge control fold axis of the folds in the granites. And we'll be chasing this off to the north in the drilling program that's about to start. And it's really evolving that geological context. So in this next program that we do and the one that will follow that, we're actually becoming more refined in our targeting and can actually work our way into the higher grade zones of mineralisation. Interestingly, on that tenement a little bit further to the north in Porphyry West was a little zone called Porphyry North. This was drilled to within an inch of its life in the 80s by small gold explorers. There's a couple of old shafts. And when it came time to raise some money, they would go back there, drill some shallow holes, get some good mineralisation. But nobody had drilled deep underneath this or down plunge, which is what we did earlier in our first program at Red Gate. And when we looked down dip, whilst we didn't see those higher grades, we saw some really nice thick intercepts of just sub 1 gram per tonne in gold. And to us, we start to see that when we look at what's going on at Porphyry and the Nexus mineralisation, Porphyry West and up to Porphyry North, we're seeing that we've got a very large system with a lot of fluid, which was what we want for the more fertile gold systems. So we continue to follow this up and not drill close and tight around the existing mineralisation, but looking for step outs to grow scale and scope. The Edgedina district is endowed as a fairly wide district, and we're seeing this emerge as a new area within the district. I think we'll have significant ounces in it. The next project that we're working on, and we're currently working on as of today, we've got a geologist in the field mapping away, is up at Middle Creek in the Nullagine district. So we're up in the Pilbara. It's a district that was explored by Millennium and before then Wedgetail, and is currently being explored for by Codrus and Novo Resources as our neighbours. And we've got a couple of processing plants that are now both operating, one to the north with Codrus and one to the southwest of our tenements in Novo Resources and the Golden Eagle Mill, which they're feeding from the Beatons Creek mine. So we're sitting in an area again with operating assets, and we're sitting on a tenement holding that has not got a single drill hole in it. So you're looking at the amount of exploration that's occurred here over the years. And I think it's fair to say that a lot of the exploration has been mildly myopic. Looking at the fault you can see at the south, the Middle Creek Fault, or the fault to the north, the Blue Spec Fault, working along those faults, looking for mineralisation and taking light steps off it. We take a step out, we can see there's numerous gold trends in the historic projects that actually run up to our tenements. Once we've done the soil sampling on our tenements, we can see continuation of those trends that are untested. So we're currently in there at the moment. We're doing the sampling and the mapping on the trenches across 7 of our major projects. We've got 11 trenches that we've dug up there. That'll give us our geological context for drilling, so that when we go in and drill, we're actually drilling with a greater sense of certainty and information. And the key one on this one is, if you think of Western Australia, we're actually returning +5 gram rock chips, +3 gram rock chips from surface in areas that aren't drill tested. So I think there's wonderful opportunities for us to continue to work at Middle Creek. At Silver Swan South, we're sitting in, again, a highly prized domain directly to the north of Kanowna Belle and to the south of the Black Swan Nickel project run by Poseidon. We've got the ultramafics that are running to our tenements, so we're also evaluating the potential for nickel in these areas. But at the moment, the key thing that our eye is drawn to is the opportunity in the west of our tenements to pick up some of the faults that come in and actually start to wrap around on the edge of that Scotia Dome. That's highly mineralised and fertile, obviously with Kanowna Belle being +5 million ounce deposit, and then working our way up to other operating mines like Gordon Sadar, and heading a little bit further out to the northwest. We've got some other operators out there as well. The ground is tightly held. Our neighbours to the south and to the west are the Northern Stars and Evolutions. And we see here we've got 2 key project areas. We've just flown some drone mag over those areas, which has really started to allow us to articulate the structure that we want to chase in there. And we'll be looking to come in there and do some drilling this year as well. And what I think is a thing that we'd like to stress is what Codrus is doing is actually trying to make sure that we've got the right geological context to our projects before we go out and have ill-conceived drill meters put into the ground that are wasting money. We want to make sure that every dollar that we spend in the ground gives us the best bang for our buck. We then take a little bit of a journey. We move ourselves across to Bull Run over in the US. This is in Eastern Oregon. Eastern Oregon is an area that seems to be forgotten by time, especially when you actually think of the history and the very rich gold history that this part of the US has. In the 1860s and 70s, this was gold rush central. The alluvials in the area were well known about and they were mined. Sumter to the north of us was dredged as the rivers. And so the alluvials slowly ran out. And over time, as the alluvials ran out, the prospectors started to look up the hills and started to wonder, where did the gold come from? Work up the hills, we start to find high-grade outcropping quartz veins with small patches of visible gold in those veins. They then started to mine into those veins. We then found that in Oregon, with the commencement of World War I, all of this artisanal mining essentially ceased, and there hasn't really been a common mining jurisdiction since. There have been little moments when people have come in and looked at it, but it's never really been a Nevada or a Utah or one of those larger jurisdictions that's quite well known and sort of just rolls off the tongue of explorers and promoters. Where we have our projects is over a small area. We've got 12 claims that we have that are under option agreement with private operators. Where they operate has been a small operating mine for the best part of 100 years. They do it as a hobby. They go in, they take 1 or 2 cuts a year of +ounce dirt from an underground, and it's purely hobby. But we've got an option agreement to secure that ground. We can explore on it for 3 years for minimal expense. And then if we choose, we can purchase that ground at a preordained rate. We've also got 103 mineral claims that go right the way around those private claims that we own 100%. So we've ring-fenced it. So we've certainly got scale and opportunity to grow. At the end of last year, we started an IP survey in that area. The snow pushed us off the ground, but we're back there now as the snow has gone away. We've got the IP survey recommenced. We'll finish that within the next couple of weeks. We've got people on the ground about to commence doing some detailed mapping and sampling for us, and we'll be flying some drone magnetics as well. So we're looking here to really make sure that we bolster our geological data sets such that once we actually go and put a rig on the ground, which we're also working to permit at the current time, that'll be well articulated and drilling the best possible opportunities. We're not looking for the small high-grade veins here that the old timers have been chasing. For them, that's all that's worthwhile. We're looking at a much larger system with some nice intrusives that are shot through with pyrite that will hopefully, with our IP surveys, give us some nice chargeability anomalies to go in and target. Newmont did a campaign in here in the 80s and drilled over 20 metres at +3 grams. But in the 80s for Newmont, that was not meeting the hurdle. So it was overlooked and they moved away. So we're really coming into an area that's not underexplored, it's pretty much unexplored. So we've got active work schedules on all of our Australian projects that we've already mentioned so far. And we're up on the ground and running now after the winter season in the US. So we're busy on the ground. We've got our geos fully dedicated to what we do. And we'll be trying to ramp up that news flow as fast as we can to keep our investors well ahead of our developments. But one of the key things about the company, and I think makes it an exceedingly attractive investment for our investors at the moment, and especially new investors, is where we physically sit. Very tight capital structure, 75 million shares on issue, $5 million in the bank with a market cap of $7 million. So the EV is very low. So from this perspective, we are super leveraged to exploration success. Once we start to get out some good results, we can see that we'll actually be able to see significant uplift in the share price. And significantly, just harking again, we're still sitting on $5 million in the bank, so we don't need to go and rattle the tin and raise any more anytime soon. So in summary, you're looking at a really focused gold explorer that has the ability and the capacity, and we are looking at new projects as we explore on our existing projects. We do have a bent for base metals, especially copper. We've got a circa 15-year history within the group of looking at base metal, especially copper assets. And we're looking to move those forward and join them in with our gold profile. So we've got a pipeline of projects to work forward. So we're well positioned, and we thank you for your time.
And with that, well done. Thanks very, very much, Shannan. I appreciate that. We've got some prizes to give out. Do you want to see if you're one of the winners? Okay, this is for Southern Cross's gold competition. If you put your name in, and your name happens to be Rami Yomtov, Lisa Vecchio, Les Sancher, Jasmine Hilton, and Michael Forward, and one last one, Victor Van. Are any of you in the room at the moment? Thank you. You're always blooming winning things, aren't you? Anyone else? No? Or should we redraw the other ones? Or you just want to take, you've actually won, it says here, a gold ingot. So just go and follow that man there on the way out, because he'll be doing drinks for all of us downstairs. I want to hear more about this. Right, let's get on to our next talk while we all ponder why we didn't enter that particular competition. Helix Resources is next up on stage. Look at this fellow up here. He's excited. I want you to keep the crowd here. It's a highly active, well-funded ASX-listed exploration company, and they're focused on making further copper discoveries on its really large strategic land position in the Cobar region here in New South Wales. Would you please welcome their Managing Director, Mike Rosenstreich.
Thank you very much, and good afternoon. Helix Resources in the process of closing a capital raising for $13 million. That gives us a large stake to go all in on finding more high-grade copper in the Cobar area in central New South Wales. And that's what I'll be talking about this afternoon. $11 million of that $13 million raise is a placement that went predominantly to institutions. And the aspects that captured the imagination and the interest of those instos was our strategic land position over 2,000 square kilometres in that greater Cobar Basin area. They recognised that we've got two existing copper resources, the CZ deposit and the Cambalago deposit, and they saw the potential for us to grow those resource areas, as well as the numerous prospects that we have on several mineralised trends that we've defined. They also understand the infrastructure-rich nature of the neighbourhood in which we're operating and the very significant mining operations that are there, and that have operated for a long period of time. Being so well capitalized takes us out of that junior operating mode space. Typically, the company had been undercapitalized and did small parcels of piecemeal work. We can now bring together a large-scale, coherent program. And what a neighborhood it is. It's really got on the map recently with the US $1.15 billion acquisition of Glencore's CSA mine by a special purpose vehicle called Metals Acquisition Corporation. Peel Mining has also recently raised $24 million as they look to make a transition or pivot onto a development pathway. If you look at our two tenement blocks there to the west and to the eastern block there, our neighbours to the north, Helix Resources, I think for about 25 years now, they've been churning out 20 to 25,000 tonnes of copper in concentrates every year. Over on the western side, that CSA operation has been churning out 40 to 50,000 tonnes of copper in a very sweet concentrate for the last 25 or 30 years, and I understand is still 10 or 15 years ahead of it. This area has large-scale, high-grade copper deposits. Down to the south, we have Aurelia operating, both a base metals and a gold project, and then we have emerging producers like Peel with their Mallee Bull discoveries there, and perhaps Helix Resources will become one of those emerging producers. That's certainly our objective. So let's have a look at the tenements. We have these two tenement groups, the east and the west, and along those tenements, we've located three mineralized trends. The Rochford trend in the middle there, which trends to the northwest, the Collarina trend on the eastern side, north-south, and the earlier stage Mariula trend. We implemented a new exploration strategy in early 2021, and one of the early components of that was to fly a regional VTEM survey. This is an electromagnetic survey, and electromagnetics is one of the key exploration or discovery tools in the area. And it's remarkable to think that only a very small portion of Helix's tenure had any EM coverage up until March of last year. So it gives us a really good base set of data with which to rank and prioritize a whole range of prospects that we have. 2021 set the stage, proved the concept. 2022, with a full treasury position, enables us to bring it home, really pick up the pace, and that's what we're looking to do. Let's have a look at the Rochford trend first. This is a 30-kilometre belt. It hosts our Cambelico mineral deposit, and it also has a number of prospects along it. What are we looking for here? We're looking for Cobar style mineralization. We believe the rocks and the geochemical signatures are similar to what we see around the Cobar area, and an example of those deposits is the CSA mine. These are deposits that have very small footprints, but very great vertical extents. They quite often occur in parallel lodes, and they have discrete structural controls on the mineralization. And if you get onto one of these things of a CSA scale, they're elephants. These are very rewarding targets for investors. So along the Rochford trend, we have a series of opportunities. We have the Cambelico resource, 1.2 million tonnes, 1.5 million tonnes at 1.2% copper. And recently, in fact, this morning, we announced further high-grade intercepts of that, 5.3 metres at 3.4% copper, which occurs 60 metres beneath 14 metres at 4.2% copper that we intersected previously. Both of these intercepts are beneath the existing resource. We've also recently outlined new lodes identified for the first time occurring to the west, and we have a range of prospects to follow up on there as well. I think you'll see as we step through the couple of the opportunities at Rochford how we really are building up that Cobar mineralization style model. That's what 11% copper looks like. That brassy yellow color on the drill core, that is chalcopyrite. That portion of the intercept that we announced this morning grades 11% copper within the 5.3 meters at 3.4% copper. And that's pretty exciting stuff when you drill that. So this is a long section through the Cambelico deposit. This long section is quite different to one I've shown previously because our geologists have done some terrific work taking lots of measurements and actually reinterpreting the geology. What we have here is we have that high-grade intercept, the 14 meters at 4% that we've reported previously. And then down beneath it, here, we've intercepted 5.3 meters at 3.34. Previously, the interpretation was that the mineralization plunged to the north. So it was pretty disappointing in the middle of last year when we hit hole 5 and only got a relatively low tenor intercept, and investors kind of left the story. But with the new interpretation based on good data, we believe that the mineralization actually plunges to the south, which means that hole 5 was a near miss, and it really opens up the down plunge potential for a high-grade copper sulfide shoot, very consistent with the Cobar style model. If we look at it and plan, a couple of features here. This is the main Cambalago lode through here, which I was just showing the long section through. And we've identified these parallel lode systems to the west. That's only a couple of 100 meters this way and then another couple of 100 meters. So we're starting to build up the story that there are parallel lodes as well. We've reported some drill intercepts into them recently. We got some interesting results, 5 meters at 1% copper, things like that. Very early days, really just having a look at the top of the system. Right now we have a drill rig there. We're plumbing the depths. We're going to map this out. Let's take a step back regionally along that Rochford structure. This shaded area is the joint venture tenement where we have a 70-30 joint venture with Eris. We're 70, they're 30. We co-fund and we collaborate technically. This is the greater Cambalago project area in here, which I was just referring to. But you can see to the north and to the south, we have other targets. And two in particular, the Caballero and the Bijou targets were followed, interesting rocks, they were followed up with geochem sampling, got strong surface soil anomalies, followed up with scout RC drilling, got very anomalous results in the RC drilling, but those results weren't going to make headlines. This is going back a few years, and so they weren't really followed up. They're left there. But for us, they're very significant because the VTEM survey that we did early last year came along and lit up underneath these anomalies as well. So helping us to rank and prioritize them a lot higher than perhaps our predecessors did. And we'll be drilling here at Caballero in the coming weeks and months as well. So you can see that there's a real profile of opportunities along here for us to follow up on. In terms of our work at Cambalago, we're going to really focus on mapping out this high-grade shoot, but we're also going to map out those other prospects. It's really going to be about EM survey, geophysics, and drilling. Let's go to the east, where we have the Colorina trend. This is an 80-kilometer long zone sitting immediately to the south and a long trend from Eris's Triton operations. What we're looking for here is that Triton style of deposit. It's distinct from the Cobar style of mineralization. It's older geologically, and the rocks are different, they're far more deformed. And you can see in the geometry of the mineralized deposits that we have there, we have these at Eris's Constellation deposit, we have the sinuous, gently plunging mineralized zone. Similar sort of geometry at their Triton ore body. And lo and behold, on our CZ deposit, we have a similar sort of a geometry as well. So these are multi-deposit, large-scale copper camp type environments. That's our tenement position through that. Like I said, 80 kilometers of mineralized trends. We have our CZ deposit in this location, 2 million tons at 2% copper and a little bit of gold. And then we have a whole range of geochem, copper anomalies, and historic workings running right through that belt, but it's never had systematic ongoing exploration. 13 million in the bank enables you to take chances, take risks, and have a look at some of these earlier stage targets. And the pink shaded area you see there is where we're kicking off some to get a large regional scale geochem data sets. And as an aside, we also have a nickel cobalt resource that we picked up through a tenement rationalization in here, which we're looking to do something with in terms of independent funding. This is a plan view of that CZ deposit. And what happens here is that the mineralization trends down plunge from left to right down here to the southeast. And you can see with these kind of assays, this is a genuine high-grade copper sulfide zone extending over about 1,200 meters in this direction. We've also recently in our drilling defined shallow, high-grade oxide copper mineralization from about 12 meters vertical. So there's a lot for us to get on with here. Our initial priority is to focus on really understanding the geological model here in the same fashion that we think we're getting on top of the geological model at the Cambalago deposit. Our work here is going to be concentrated, yes, on building up the resource base around CZ, but I'm also really keen to bring a whole range of regional targets and advance them, kill some off, but really see some moving through into preliminary resource work. So we've got 13 million bucks coming in, and you can see from this pyramid, project pyramid in terms of early stage projects, advancing up this way, we've got a lot of targets to test as well. Our core objective is to define around about 200,000 tonnes of copper. I think that's the kind of threshold by which where you can start to think of a standalone operation. I want to be on a development pathway. Of course, we can get lucky. We could get onto a CSA style or scale target, and that would just change everything. But we are really in the right neighborhood to do that make those kind of discoveries. In terms of the money we've raised, half of it's going into the Rochford area and half of it is going into drilling. That's where our priorities are. In terms of the capital structure of the company, when we've completed this fundraising process, we're going to have about 2,300 million shares on issue. So there's plenty of liquidity there, a market cap approaching $30 million and a treasury of $13 million in it. The reason we did such a large raise was to get that institutional support and consolidate the share register, enable us to accelerate and really boost our exploration effort. And it gives us certainty on funding in what are really quite uncertain times. So just in closing, Helix Resources offers an investor quite unique leverage to Australian copper exploration success. It's our sole focus, copper in Cobar. We've got the team, we've got the money, we've got the targets, and there's this wonderful copper price environment keeping everything ticking along. So thank you very much.
Mike, thank you very much. We've got four more opportunities for you to grow your investment portfolio. BMG Resources is next up. They're the owner of 3 highly prospective gold exploration projects in Tier 1 mining jurisdictions in Western Australia. There is the Abercrombie project up in Wiluna, the Invincible project in the Central Pilbara, and the South Boddington project in the Boddington region. BMG has recently completed a major RC and diamond drilling campaign, correct, campaign is the right word, at Abercrombie.
Correct.
And for the results and more, would you please welcome BMG Resources MD, Mr. Bruce McCracken. Welcome, Bruce.
Great. Thanks, Chrissy. Good afternoon, everyone. It's great to be back here at the 22 version of the RIU. We've had a really busy 12 months. We've made some great gains, and I'm very pleased to take you through some of the things that we've been doing. There we go. Look, so in terms of what we're about at BMG, we're exploration focused. We have 3 great gold projects in Western Australia. You can see they all sit in excellent gold provinces. We believe there's fantastic potential across all of these projects. The most advanced of them is the Abercrombie project, where we've focused most of our effort in recent times. So let's start by looking at that project more closely, and then we'll step through the others. So in terms of where we're located, we're about 25 kilometres south of Wiluna. You can see we're close to the Goldfields Highway, so access is very good. And we sit on the edge of the Lakeway system. The Wiluna province is obviously very well endowed with gold. We have 2 mining leases in which we hold the exclusive gold and other mineral rights. We don't hold the uranium, that's held by Toro Energy. We've done a lot of work in the area and defined something that's pretty exciting. So we'll talk more about that in a moment. But look, in terms of the geology, it's excellent. We've had the opportunity to do some metallurgical test work and the gold's free milling. We have good infrastructure in the region, being proximate to operating plants at Wiluna. And we only acquired these projects, I guess, about 18 months ago. So they're reasonably new to us, but we've been getting on with business. We've done 2 drilling campaigns, excellent results through both of them. The most recent campaign, we've just completed and announced the results about a week ago, and that's been a real game changer for us. It's substantially expanded the mineralized footprint and really shifted this project forward. So if we look at the region in which we've been putting most of our focus, we can see from the visual that, look, there's an emerging large high-grade resource at Capital. There's an extensive mineralized system with numerous high-grade intersections. And you can see some of those on the visual. I mean, they're pretty impressive numbers. The mineralization now extends for around 1.5 kilometers. So it's significant, but it still remains open in all directions. There's numerous northwest trending mineralized shear zones, and you can see the 2 major zones, the west lode marked in the red and the east lode on the diagram. The bulk of our work to date has concentrated on the southern area of that Capital zone. So if we look at a plan view showing the interpreted lode positions, we can see, 2 heavily mineralized areas. There's some great intercepts, broad widths, very high grades. The dark lines are the traces of our recent diamond program. And this one has really shifted things. The two bottom traces, we can see we've significantly stepped out along strike. And we've also put in some deeper holes, which have shown great results. So as I've indicated, this is a real game changer because it's effectively doubled the likely size of the deposit. It's intersected extremely high-grade gold in fresh rock. Okay, so this is outside of the oxidized zone. And it's proven that the system is fertile at depth with our deepest drilling to date. So if we look at a section, you can see the A section marked, and then we'll look at a couple of long sections. So we can see the heavy mineralization through the 2 primary lodes. They're steeply dipping. The west lode is the area to the left, and then the east lode's the more central. The deeper drilling has now taken the mineralization down to at least 400 meters below surface. That's twice the depth to what we previously had. And we've actually seen mineralization now down below 500 meters below surface. And that's significant because we do know that these systems through this region run very deep. There's certainly indications of further zones outside of the 2. We can see the hanging wall lode, which is to the east of the east lode. And importantly, this mineralization remains open at depth and along strike. So if we look at the long sections, this is looking along the west lode. You can see the section, which is the dotted line in the section in the middle. And what we're essentially seeing is an emerging steep shoot control to the thick high grades. If you track the purple squares down, that's plus 50 gram meter intercept. So, I mean, that's really high grade stuff. Hole 3 had a really nice intercept on the extension of that high grade zone. We can see there the 13.5 meters at 6.7 grams. We then stepped out further along strike, another 250 meters to pick up that zone again. But unfortunately, we had a drill rod failure So we didn't get to depth on that hole, but we will put another hole in the next couple of weeks. So what we see here through the western lode, it remains open in all directions. And, you know, there's great potential to add significant ounces. The eastern lode, it tells us a similar story. Thick, extensively mineralized areas. There's an emerging shallow plunge to the high grade zone. It's a lot shallower than what we saw in the western lode. We've confirmed the high grade extension of this area, and you can see diamond hole 4. There was a really nice intersection, 10 meters at 11.7 grams. That's about 250 meters along strike. So in round terms, that's almost double the strike length, and confirmed that the system remains open in that southerly direction. And so again, as we're seeing with the western lode, there's significant potential to add ounces to what is an already significant resource footprint. The other thing that's really exciting in terms of what we're seeing at Abercrombie is that there's significant exploration potential beyond the primary zones around capital that we've been focusing our effort. And there's been some wonderful historic intercepts that have happened outside of the areas that we've drilled so far. We can see some of those in Capital North. So we'll certainly be seeking to follow up those areas with future programs. And more recently, we've conducted a large air core program, over 10,000 meters, testing sub-audio magnetic targets to the south. And this has highlighted 3 highly prospective, large anomalous zones that have many of the structural characteristics that we're seeing through the main capital lode. So, I mean, this is really significant, and it's actually quite exciting. We can see the Capital South area, that's about 1.7 kilometres. And then the Archer and Barrack areas to the south is, 1.4 kilometres there at Archer and sort of half a kilometre or so at Barrack. So, I mean, these are 3 really prospective areas and add great potential to add to the already growing resource footprint at the capital area. So look, a really exciting time for this program. We've had, for this project, we've had great success from our recent drilling program, and we're now moving quickly to follow that up and to keep pushing forward. In terms of our other projects, our Invincible project, this is another gold project in the central Pilbara. We have an area which is immediately along strike from Codrus Resources 1.5 million ounce Warrawoona project, which is now in development. We host about 12.5 kilometres of the shear zone. There's been small artisanal type workings, some really high grade gold's been extracted from this area over the years, but there's been little systematic modern exploration. So that's really what we're focused on. There's also a growing number of lithium projects through this district, and we see potential for lithium pegmatites on our Invincible ground, and we're currently doing field work. We also have a new area under application, which we can see here on this diagram, which, we think this is a really exciting addition to the portfolio. In terms of the primary Invincible tenement, we can see that that's contiguous with the Codrus tenements on the shear zone, and we see potential for repeat trends right throughout that zone. In terms of the lithium, the Mount Edgar granite complex is known to host lithium pegmatites. That's the pink area above the Warrawoona shear. And we can see that we hold a degree of ground in our Invincible tenement within that zone, as well as the new application, which is pretty exciting. And the new application is close to a number of known lithium deposits. In terms of drilling, look, we've undertaken a geophysical program at the site with aeromagnetics and radiometrics. We've identified a number of targets which we're now working through with some field work and geochemical sampling to ground truth, and then we'll be following up with drilling. South Boddington, this is a longer term opportunity, but one that we consider highly prospective. We've got 2 areas under application, a long strike from the giant Boddington gold mine. This project area comprises ground in the Saddleback Greenstone Belt, which is the area that hosts the Boddington gold deposit. We see strong potential for additional deposits within this belt because there's been an amount of exploration. So as a longer term opportunity, we see this as a great addition to the portfolio. In terms of work, look, we've been very active through 2022. We'll remain active. We've got drilling coming up at Abercrombie, field work in Invincible, and follow-up drilling, and South Boddington will follow in due course. Corporately, clean capital structure. I guess the takeaway on this slide is that we are extremely cheap relative to what we have in terms of resource potential, particularly with the major steps forward we've made at Abercrombie in recent times. We have 2 million of cash due to us from our Cyprus investment that we have, that we're divesting in the next couple of months. We have an option arrangement around that. And the other thing to note is the management and the directors are heavily invested in this company, so we're all aligned to its ongoing success. In terms of the team, I won't dwell, but there's great experience from a commercial and technical perspective across the team. Look, just to sum up, 3 fantastic gold projects in WA, advanced exploration, great success, particularly with Abercrombie, where we focused our work. Wonderful step forward for that project in recent times, and there's a lot of momentum now to push forward. Our EV relative to what we have is extremely attractive. And, if you start looking at some of the macro factors in the gold space, I suspect there's more of a tailwind than a headwind. So what does that point towards? BMG represents great value. Thank you.
Thanks, Bruce. All right, New World Resources NWC has received some pretty high-grade drill results from its Antler copper project in the US state of Arizona as it pushes to bring that deposit back into production. Michael Haynes, how you going? Going good? Okay, you're going to make me a big presentation? Excellent. Would you put your hands together, ladies and gentlemen, for Michael Haynes, Managing Director, CEO of New World Resources.
Thanks very much. Thanks very much for everyone for attending, particularly this late in the conference. But it's a real pleasure to be here and have the opportunity to talk a little bit about our Antler project in Arizona. It is the highest grade undeveloped copper deposit on the ASX. There is one slightly higher grade copper deposit on the ASX, and that is Sandfire's DeGrussa deposit. We're not far off them for grade, and we firmly believe we have now established a critical mass to develop a standalone processing facility. And so we have a 2-pronged approach here at Antler. Firstly, we continue to expand the resource because the mineralisation is completely open, over 500 metres of strike that we've drilled to date, and it is completely open to the south. But equally, we are pushing this back into production to capitalise on what we anticipate are going to be prolonged high copper prices. Now, I don't want to dwell on the copper market, but I have pulled up this slide just to illustrate when we got involved in this project and why we got involved in Antler. 2.5 years ago, New World deliberately set about securing a high-grade copper deposit that we could take to production. And that was because we viewed, and I think the broader economic community views, that there is highly likely to be a prolonged shortage of copper. Indeed, this chart illustrates that a forecast in 2030 of a shortage in supply of 6 million tonnes of copper metal. That's on consumption of 26 million tonnes of copper metal a year. So that is a huge shortfall. Now, even if this forecast is only half right, I think we are in for a period of sustained high copper prices. Notwithstanding that, the fact that the Antler deposit is such high grade, we are very well insulated from copper price. So we aren't particularly sensitive to the copper price environment, but what we are doing is bringing Antler back into production to maximise the potential returns from this project through a period of elevated copper prices. So New World secured this asset in March 2020, 26 months ago. We took a 4-year option to take 100% interest in the project. And in March 2020, we commenced drilling, and we have not stopped drilling. The drilling success that we had in the first year and a half led us to exercise that option early. So we took 100% ownership of the project in October last year. And to do so, by acting early, to do so, we purchased 100% interest in this project for close on $1.5 million US. We now own it. And we see that given what we've got, with a market cap of $75 million, huge exploration upside, and taking this into production, we see that we are heavily undervalued. Now, I'll talk initially about the exploration that we've been doing, the resource that we've delineated, and the exploration that we've done since, and I'll touch on the economics of a potential mining operation here at Antler. The project is located up in northern Arizona. It's a fantastic place to operate. The initial slide that I showed you showed that it's arid Arizonan desert. It is sparsely populated. Between the Antler project and the town of Yucca, which is 15 kilometres away, and through Yucca runs an interstate highway, transcontinental railway, we can see 9 dwellings along that road. It is sparsely populated. We aren't in an area of shared land use, and we are on privately owned land that is really going to assist us as we go through the mine permitting process. In terms of scale potential here, up in northern Arizona, there is a cluster of 30 or 40 known VMS deposits. So this is not a one-off deposit, and as the geologists amongst us would know, where there's one, there's typically another. In this case, there's a district that stretches about 300 kilometres across and about 150 kilometres north-south, and within that cluster, there's 30 or 40 known VMS deposits. The largest of which is the United Verde deposit, where historically 33 million tonnes of ore was mined at 5% copper. And there remains another 20 million tonnes of ore there. So that's a 50 million tonne deposit. That's the scale, the potential scale of this district. They can be very, very large. Notably too, Arizona is a pro-mining state. 70% of the US's copper comes from Arizona. So we are in a very good jurisdiction, very supportive of mining, and readily draw upon skilled workforce. Historically, only a modest amount of mineralisation had been mined from Antler. Only 70,000 tonnes had been mined from the period 1916 through to 1970, but it was very high-grade mineralisation, and that's what attracted us to it initially. The historic production was around about 5% copper equivalent. Now, when we evaluated the opportunity, we saw that there was considerable exploration upside. All of that historic production came from within 150 metres of surface, and almost all of it came from about 100 metres of strike. We saw a system that outcropped at surface over 750 metres of strike, and there was a drill hole 550 metres below this deposit that had intersected 11 metres of massive sulphide mineralisation. That's what really attracted us to this project. We saw sky's potential. So we secured the asset in March 2020 and we commenced drilling. And as I say, we continue to drill. We continue to drill with 3 rigs on site. To this point, we've completed 105 holes. We've received assay results for about 90 of them, and we continue to drill. Back in October last year, so 6 months ago now, we thought we were approaching a critical mass to develop a standalone processing facility. We'd done some early stage mine design work, and our mine design work indicated that we could probably develop a relatively modest CapEx project with a single decline that would see production profile of around about 1 million tonnes per year. So we set about delineating an initial 6, 7, 8, 9 years mine life with a view to being able to mine that ore over at a rate of 1 million tonnes per annum. So in October last year, we thought we were approaching that critical mass. We didn't stop drilling. In fact, we got more rigs on site because the exploration potential continues. But we want to get this into production at the same time we make it bigger. That is the best value proposition for New World. The drilling to date has delineated consistent mineralisation over the entire 500 metres of strike that we've drilled, down to a vertical depth of 700 metres. Our success rate is about 97%. So there's 4 holes that we have drilled that have failed to intersect massive sulfide mineralisation, and indeed 2 of them were deliberately targeted at the northern end of the deposit where we thought we actually didn't expect to hit mineralisation. So our strike rate is phenomenal. Amongst that mineralisation though, we have delineated 3 thicker high-grade shoots, probably structurally controlled. Regardless, they're exceptionally consistent, particularly the main shoot. So the main shoot is the shoot that we see on the left, highlighted on a grade thickness long section here. To reflect the grade and the quality of the mineralisation here, in yellow is mineralisation greater than 10 copper percent metres. So 5 metres at 2% or 2 metres at 5% copper equivalent. Then when we go to orange, we're looking at greater than 20%. Red, greater than 40 copper percent metres. And magenta, which most people would be happy just to have a single drill hole that would fall into the plus 60 copper percent metres. We see the main shoot, every single hole in that at depth is running greater than 60 copper percent metres. So 10 metres at 6%, 12 metres at 5%, any way you like to slice up, 15 metres at 4%. It is exceptionally robust, exceptionally high-grade mineralisation with very sizable step outs. Our drill density here is typically 60 to 70 metres down dip as we were building our maiden resource. And as we've extended mineralisation beyond our maiden resource, we are now consistently targeting 80 to 120 metre step outs with our drill holes. These aren't drilling a successful hole and then drilling 5 metres next to it and having another successful hole. This is stepping out a significant distance, but significant statistically so that 74% of our resource base is declared indicated. So the resource base that we did declare in October or in November, so this was drilling up until early October, is 7.7 million tonnes at 3.9% copper equivalent. Extremely high-grade mineralisation. But the mineralisation continues at depth. Our target is to take this to 10 to 12 million tonnes this calendar year. To see some of the recent exploration successes we've got, then in the purple section here at the base of the main shoot are some of the recent results that we've returned from drilling below the JORC resource. 42 metres at 3.8% copper equivalent, 17 metres at 4.8 percent copper equivalent, 13.3 at 4 copper equivalent. And the deepest hole on the project, now 150 metres down dip from the resource that we've declared, 10 metres at 6.2% copper equivalent. The mineralisation persists at depth. And then if we look at South Shoot, same scenario, deepest hole in South Shoot, 17 metres at 5.5 copper, 16 metres at 3.3 copper equivalent, and 7 and 3, so combined 10.5 metres at almost 6% copper equivalent. This mineralisation remains completely open at depth. The resource is entirely constrained by lack of drilling, but we continue to drill 3 rigs, drilling deeper and deeper into this deposit. In terms of the potential economics of developing this, what are we looking at? Well, firstly, to put the value proposition in perspective. On yesterday's commodity prices, 7.7 million tonnes at 3.9% copper equivalent, which is what our resource, equates to 2 million ounces of gold at 7.9 grams per tonne. That's the value proposition here for a company that's got a market cap of $75 million, with mineralisation remaining completely open at depth and improving as we go deeper and deeper. We are contemplating a mining operation of around about 1 million tonnes per annum that would see us produce around about 30 to 40,000 metric tonnes of copper equivalent metal a year. It'll be 20 to 25,000 metric tonnes of copper in concentrate with a zinc concentrate and a lead concentrate. And importantly, this project is not sensitive to commodity prices because of the grades that we're looking at. Equally, if we can capitalise on the forecast high copper prices, this will be an extremely lucrative mining operation for very modest capex, because we're only looking at developing 1 million tonnes per annum. Surface footprint of the project will be extremely small. Underground only operation, 50% of the waste product will be returned to the underground as tails to have 100% recovery. Very socially and environmentally responsible project. So from here, what have we got? We've got forecast very high copper prices, a very robust, very high grade copper resource in an environment where we forecast we can come to production, be in construction in 2024 and be in production in 2025. Thank you.
Thank you so much. New World Resources. Now, our second last presenter today is a very successful exploration company leveraged to multiple commodities and currently targeting ESG tin production at its Mount Lindesay project, one of the largest underdeveloped tin projects in the world. We welcome Venture Minerals Ltd Andrew, who will discuss this emerging EV metal, more versatile than you would think. Hello, Andrew.
Thank you, Chrissy. Good afternoon, ladies and gentlemen. It's great to be back here at RIU Sydney Resources Roundup Conference. And again, thank you to Vertical Events for holding another successful event. As we'd like to talk about our Mount Lindesay flagship project today, and that's in the northwest of Tasmania, but also about Chalice Mining's joint venture activities in WA. The advanced Mount Lindesay project, for those of you who don't know, has already had nearly $40 million spent on it, more than 100,000 metres of diamond core drilling, completed an open pit full feasibility study in 2012, and is one of the largest undeveloped tin deposits in the world. The project is already located in a Tier 1 ESG jurisdiction that has already reached net zero emissions with access to renewable energy with hydropower at a time when tin prices are near record levels of around $41,000 per tonne, which is over 4 times the price of copper. Tin is an EV metal, and certainly the time for tin is now. It's a disclaimer. As you know, backing up those facts about Mount Lindesay, we just engaged the study manager and proceeding with an underground feasibility study. So the idea here is that previously in the open pit we had 200 hectares of disturbance. Now we're bringing that down to about 33 hectares. So we're using the hydropower like we were previously. It's going through our tenement. It's been there for 3 or 4 decades. So we're just going to tap into that network and going to build a paste fill plant, put all the tailings back down the hole. So we're going to produce a very, very low footprint environment for the project. So that's how we're going to tick all the ESG boxes there. Northwest Tasmania's already got 140 years of mining history. So we're very well positioned to produce that ESG compliant tin production. For the first time last year in about 8 years, Venture started drilling at Mount Lindesay, and having drilled out the Mount Lindesay deposits, the main skarn and number 2 skarn, we went on to exploration initially and had success straight away with a couple of EM targets. And we've got 48 EM targets to test, but they yielded exploration good success and early mineralization there, which we're going to follow up now. But for the previous 6 months, we've done exploration feasibility type drilling. So we've collected about 10 tonne of sample, which is now starting to go into the laboratory to test the concept of a much simpler flow sheet, which is more gravity focused in case of and separating the tin and the tungsten using electrostatic separation. So I'll talk a little bit more about that later. But certainly Venture is very active, and for us, it's not a matter of if, but a matter of when we'll be finding Australia's next new tin discovery, being located in such a great Tier 1 jurisdiction for tin. Chalice, well, they defined 11 new EM anomalies using ground-based EM last year, and they're currently drill testing those. The Raleigh iron ore mine is prepared for a quick startup should the iron ore price thematics come back in our direction with obviously better shipping prices, higher iron ore prices, and a lower discount. Downhole EM at the Golden Grove North Mine generated some targets that we're looking to follow up. We are going to do some more ground EM later this year. And at Coolin, we've already engaged to do a fairly significant, something like 1,400 line kilometres of EM airborne surveying to be done later this year at Coolin. So there's work happening on those, but obviously towards later in the year. Now, the corporate snapshot, the company's market cap's around about $90 million. You'd see from that graph, first top graph there, that we had something like a $200 million market cap when we hit 16 cents in the middle of last year, when the iron ore price was around about $230 and Chalice were beginning to become active. But one thing that most people have probably forgotten about Venture Minerals is the tin's aspect. And there's it's compelling value there. Tin prices something like doubled in the meantime last year. And right now, at 41,000, got as high as 48,000. The Mount Lindsay project is a very attractive proposition. We also welcome back Republic, which was a major shareholder, Singapore-based fund. They went out during the COVID period of time, and they've entered back in, and they actually cornerstoned the investment that we in the placement we did at around Christmas time, where we raised $10 million. So we've got $12 million in the bank at the end of the quarter. So we're fully funded for all the activities this year. The team there, it's been there since the very beginning, and that's allowed us to pivot onto those projects very quickly when the iron ore price and the tin price improved in the last few years. So we're very fortunate to have that team still working with the company. Now, just talking about, I'll swing on to the Mount Lindsay assets. I won't be talking much about Golden Grove or Coolin today. Those of you who have been down to Tassie, there's a fantastic amount of infrastructure. Like I said before, 140 years of mining, bitumen roads, power lines, railway lines, hydro power stations. There's one sitting here underneath the Livingston label called Reese Dam. Bastion Dam sits here, and the power line goes straight through our tenement. So we can put a substation in and plug into that power at 7 cents a kilowatt hour. That's a very attractive proposition. There's the Port of Burnie, 125 kilometres away by road from Raleigh, and that's where maximum sort of size ships of 45,000 tonnes can be loaded. Bit about tin for those, not a lot of people know about tin. Tin is a spice metal. Its main use is solder, 96% tin for solder. Used to be 40% lead, 60% tin. In this decarbonisation world that we're going through, doing electricity-based economy, you need solder as a glue to connect all that. So every bit of circuitry you got in your iPhones, you've got 0.7 of a gram of tin. If I told you that the tin price is going to $100,000 per tonne, it would add about an extra 4 cents value to your phone. So it has very little impact. It can't be substituted. It is very, unless you want to use silver, of course. And so tin is very much synonymous with the future as we're going forward. It's in tin foil and solar panels, electric vehicles and the anodes of batteries, as well as all the electric circuitry, and obviously used also for energy storage and recycling, as you can see. Moving on that, like I said, solder is the main part. We've gone through the miniaturization phase. I don't know about you, but all the phones seem to be getting bigger. We've got not one, we've got two phones. We've got iPads, laptops. Your washing machine's got circuitry in it. Tin's everywhere. The 5G network, when it goes out, will require more tin again. Electric vehicles require another 60,000 tonnes of tin metal per annum. Currently, the world produces 390,000. Where that's going to come from is anyone's guess. The world is definitely getting short, and that's why the price is getting higher. So, and tin continues to be developed as a technology to improve the efficiencies of lithium-ion batteries. It's also in lead acid batteries as well. So when you think about tin, Wood Mackenzie about a year ago said, well, there's plenty of tin sitting around the world. The problem is that 90% of it sits in high-risk ESG jurisdictions. And you can look at that list of tin producers: China, Russia, Indonesia, Egypt, Brazil. Doesn't inspire with a lot of confidence. Bolivia, Peru, Congo, child labour used in some of those jurisdictions, digging up seafloor beds or river channels, no rehabilitation, very poor mining practices. It's definitely not responsibly sourced. And therefore, Venture offers, by mining tin in Tasmania, net zero emissions, a very unique product for the world. And so we're very well placed with the Mount Lindsay tin asset. Not only do we have tin, we've got tungsten, a critical mineral as defined by the Australian government and most other governments in the world. Tin is on most, probably half of those lists as well. But China dominates the market. It's like a rare earth. It can't be substituted. It's got a high, it's hard and it's second to diamond. It's the highest melting point of any metal. There's a hole that we drilled back and announced that on the 14th of February 2008. That's about the fifth drill hole Venture drilled, hole number 70 into the project. And we got, a 12 meters at 1.7%. That is a King Island type intersection. So not only do we have a tin deposit, we've also got a tungsten deposit sitting in the same rock, along with a fair chunk of magnetite. So if you wondered why tungsten is so important, it's always been a strategic metal. US government's very interested in funding Australia to get these tungsten mines built, and certainly in terms of armaments and semiconductors and steel hardening, it's very important. So tungsten carbide drill bits being a very good example of that. Certainly, we've got in our project EV metal and critical minerals demand with tin and tungsten. Like I said, one of the largest undeveloped tin projects in the world. We've got a third of a King Island deposit sitting in our product and a whole bunch of intersections. So we're focusing in the PFS on that high grade zone of 4.7 million tonnes, but with a higher price, we may get a little bit more to optimize. So stay tuned for that, for those results later in the year. With 100,000 meters of drilling, you'd expect a fairly high well-drilled deposit. Over 70% is in the measured and indicated category. We did test work towards the end of the last study. We got 75% tin con. But when you got a price of $41,000 at 4 times the price of copper, more than 3 times the price of tin was back in 2016. Teamed it up with tungsten being twice the grade, twice the price, so it was in 2016. This is certainly a very good time to be developing this asset in a premier tin district, and then, like I said before, a tier 1 ESG jurisdiction. We are along strike to Renison Bell, just down here. We're currently drilling in this area, looking for another Renison Bell deposit. Renison Bell's been going for 130 years. Australia's only tin mine, half owned by Chinese consortium of companies. So only Metals X only own 50% of that, and they're making very good money at 1.1 kilometres below surface. Our drilling last year, we first started drilling, went along the Renison mine sequence, and straight away we hit mineralisation. There's hardly a drill hole in this, and some of these were drilled back the other way. There's 500,000 tonnes sitting at 0.9% tin here. We're looking to mine that pit as a starter. There's an extreme amount of value, so you can multiply those numbers and come up with some very significant free cash flow to be generated that may help construct the mine, the Mount Lindsay underground mine, just to the north there. We also drilled an EM anomaly just along strike, and we got another great indicator of pyrrhotite and pyroxene hornfells, or skarn, are sitting around our cassiterite zone. So either of these holes will be followed up in the short term, and we're very confident we're going to get a tin discovery just out of these first 2 targets. This is an example of some of the drilling we've been doing on the MET program. 3 meters at 5% tin. In the UV light, you're seeing the scheelite glowing. They're virtually next to each other. So again, very nice looking core, 147 meters of percent tin. That's straight down the chute, but just to show you the tenure of a high grade zone. Just briefly swinging on to the Chalice joint venture. For those who don't know, Chalice did a JV with us about 3 months after the Julimar discovery. You see we're in that Western Yilgarn province that they've earmarked out. They have to spend $3.7 million to earn 70%. And they're well advanced with that. They've spent something like $400,000 before the drilling program began. But I suppose this is the kind of money shot, the main reason they're down there. You look at the mag signatures down there. We have chrome-rich rocks like they have there at Julimar. Magnetic signatures are very similar. We have EM targets. We hit massive sulfide in 2018. And now they've done the ground EM. That massive sulfide intersection was on the corner of a plate that they intersected, which they're drilling straight through the middle of as we speak. So, we look forward to their results in the coming period of time. And we'll release those probably. We'll hear something about that later this quarter. And amongst all that, the most important thing that I found was that they're actually doing some great, generating some more targets with some more auger geochem program over that Tor magnetic feature. So this year is very much about the study at Mount Lindsay. The Raleigh iron ore mine's ready to go. Chalice are drilling as we speak, and we'll be doing some activities on the Coolant and Golden Grove North projects later in the year. So in summary, we're advanced in tungsten project, well positioned with a strong EV and critical mineral markets, tins at record prices, tungsten's at very strong prices. We're targeting ESG tin production, which is very achievable where we are in a tier 1 jurisdiction. We're actively exploring for the next new tin discovery in Australia's premier tin district. We look forward to obviously Julimar's drill results down at the Southwest project, and the Raleigh iron ore mine provides a free option to the iron ore price. Thank you.
Thank you, Andrew. Right, keeping us in the room to the penultimate moment is this gentleman, Andrew Pumphrey, and Oz Resources. Oz is exploring for gold across its 2 advanced 100% owned gold projects located in a plus 30 million ounce gold district in the heart of the West Australian Eastern Goldfields. What have they found? Is this what we've been saving ourselves for the last 3 days? Welcome, sir. Put your hands together, please, for Andrew Pumphrey.
Thanks very much, Chrissy, and thanks very much for the organisers of RIU for putting on this fantastic event. It's been a few years since it's been on. We're from Kalgoorlie in WA, so it's really good to be over here in Sydney and touching base with all the Sydney investors. In the background, you can see our drilling there and the Carosue Dam deposit or mine there, just to give you some scale of where we're at. Well, we've got 2 advanced projects, Mulgabby North and Patricia. We've been RC drill testing at Mulgabby North over an 8-kilometre strike. We've recently made a new discovery there, and we're really excited to put that out to the market 2 weeks ago. Got some really great intercepts out of that, so we're following it up with diamond drilling right now. But we'll talk about both projects anyway. We've also had some excellent high-grade air core results over about a 4-kilometre strike at Mulgabby North. As I've mentioned, that project adjoins the Northern Star 3.2 million tonne per annum mill, and it's had limited exploration on it, believe it or not, even though being so close to Carosue Dam. Our Patricia project is located northeast of Kalgoorlie. It's a high-grade gold project, and we've just been doing some RC drilling there, and we've recently done some diamond drilling over there. And I suppose we're basically 130 kilometres northeast of Kalgoorlie, just so we can get a scale of where we're sitting. Corporately, we've got 114 million shares on issue. Management holds roughly about 50% of the company, so it's quite tightly held. $3.3 million in the bank. Directors and management, we've all sort of had a mining and exploration background. We've been around the place for a while. So on our share price, we've recently had a spike based on that release we put out 2 weeks ago. So we saw about 25 million shares went through in a couple of days. So that's, yeah, it was nice to see anyway. So moving on, look, we were in a strategic location for both our projects. Mulgabby North is basically on the Keith Kilkenny shear zone, and Patricia is over at the Laverton tectonic zone. There's multiple mines there and operations. I mean, it's a 30 million ounce district, so you know, we believe that's the right place to be. We're basically a gold focused company, so we think this is the right part of the world to be in. And both those corridors are major structural corridors, which is a really important thing. And look, we're sort of obviously adjoining Carosue Dam is probably is very important. I mean, there's 3.5 million ounces over there. We're in the same rocks, so you know, there's every chance that we're going to find a lot more gold where we are. So also we've got a lot of long-standing relationships. We've been working in the area for a long time, so that's made sort of getting on the ground a lot easier than normal. Last year, like, we were a new IPO, so we've done over 80,000 metres of drilling in our first year, which is probably a record for an IPO. And that's all been systematic drilling along the relief shear, most of it. So I'll talk about that in a little bit. We've done quite a lot of RC drilling also. And basically, both our projects are 100% owned. And we've intercepted significant gold mineralisation in both our RC and air core drilling at both our projects. In particular, Mulgabby North air core, we've intersected widespread gold mineralisation there, which I'll talk about shortly. And look, we're using modern exploration techniques. I'm a big believer in good science is a key to making a major discovery. I worked on the Carosue Dam deposit when it was found with Bamforth as a contractor. My wife was a geologist on the drill rig that drilled the first holes into that project. So, and we've also worked in the area for a long time. So I've seen, you know, how some of these projects can evolve very quickly based on the results you're getting. So I'm a big believer of high quality technical geology. I've worked for some of the best explorers around the place and I've learned a lot from those guys. And this has been the opportunity to apply it to Auzorum and yeah, make a significant discovery. So Mulgabee North, our main structure is the what we call the relief shear, which is sort of runs all the way up here. And basically we're in the Carosue Dam basin, which is those light grey rocks or light grey colours on the plan there. And that's a major sin form. So basically Carosue Dam stratigraphy is folded back around on itself and it comes up on our western side. We've done the geochemical classification. We know exactly what the rocks are there and we're very confident of our interpretation of that. I guess it has been previously underexplored. I mean, I've held the ground for a long time and we've done systematic exploration, but we've never been able to do the volume of drilling that we've just done last year. And we're obviously looking at 20 or 30 metres transported cover, which means that no historical exploration or as far as like historical mining or anything has been done on this Mulgabee North, which is really exciting. We've generated numerous targets for RC drill testing and basically all the gold mineralisation we've intersected so far is open at depth and along strike. We've got about 8 kilometres that relief shear. There's some important things that happen there that I'll talk about a little bit that basically cause gold mineralisation to be along that major structure. And we think Mulgabee North has all the hallmarks of, you know, potentially significant new gold discovery. And I think we've probably made that 2 weeks ago by the looks of it. These are some of the numbers we've been getting from our RC drilling during the year, but the first 2 intercepts, we hit 56 metres at 1.31. That included 18 metres at 2 grams at what we call the D mag zone. And then another hole there intersected 28 metres at 1.79 grams per tonne with 8 metres at 4.78. Importantly, that was down about 160 metres. And that consisted of a number of high grades within that 8 metre interval, that gives us a lot of confidence that we've now intersected high grade mineralisation open at depth. It definitely looks like they're 2 separate shoots. A little bit more on the D mag zone. Basically, we've got these magnetic, well, pointing at the right spot. These rocks here basically got a high magnetic signature. They extend all the way through, but around this blue circle is what we call the D mag zone. And basically that's where we get our magnetite, which is a magnetic mineral that's been destroyed and it gets turned into hematite. And the way that happens is a function of the amount of fluids that are going through the system. Normally, when you've got that volume of fluids going through a system, that's how you form a gold deposit. So we know that all the major gold deposits at Carosue Dam sit on north-south faults. And previous interp work that's done by Saracen shows that that DMAG zone sits in the north-south fault. So we're really excited by what this thing could be. And I'll go on a future slide, I'll go over a little bit more in detail over that. Other drilling that we've done along the relief shear, we've intersected up to 73 metres at 1.3. And there's some high grade mineralisation there too of 10 metres at 4.6. A number of other results and some other, obviously some wider lower grade mineralisation. And what that tells us is we're in a big system. And I'm absolutely convinced that this project's going to get bigger and bigger as we do more drilling. A little bit on the air core drilling. Look, we put 48,000 metres of air core drilling, which does seem a lot, but we've drilled that out, the relief shear over about 4.5 Ks on a 100 by 40 metre drill spacing. And look, that's necessary because we've got transported cover. The geochem doesn't work that well. We've been doing this bottom of a hole geochemistry, which I'll talk about a little bit, but we have intersected a number of significant intercepts with that drilling, especially within that DMAG zone. One particular section on those holes we just shot up there, 4 metres at 1.47, 4 metres at 2 and 4 metres at 1.68, set directly above our recent RC intercepts. And that's basically supergene mineralisation. Another takeaway point from the plan that I've got there is like we've got a big supergene blanket that extends for over 4 kilometres and it's probably about 150 metres wide. So, I mean, there's a lot of smoke in the area, and look, we've worked on a lot of projects over years, but you don't see that extensive amount of supergene mineralisation on a project without there being significant primary mineralisation. We've probably been drilling around it with our previous RC drilling, but now I'm confident we've probably nailed something. So we've got a number of our air core holes that have ended in significant mineralisation. And what the air core basically has done is provide us a number of targets to follow up with RC, and we haven't drilled all them yet. Obviously, we've gone for this best one first, which we drilled sort of back in February this year, February, March. So, and we're going to be following it up with a lot more drilling. Obviously, we've got some high-grade paleo channel gold mineralisation there. And look, my favourite saying is that paleo channel gold, if it hasn't fallen out of the sky, it's come from somewhere. We don't think it's come from too far. And it's always, when you're seeing those sort of grades, I mean, that's obviously, you know, not far away from significant primary gold mineralisation, or it wouldn't be there. You wouldn't have it. So a little bit more, we've got the air core holes there with the, that's the gravity image. So we've done gravity and mag over the Mulgabee North project. And yeah, that's clearly defined that over 4 kilometre zone, as I was mentioned. We've done the bottom of the air core geochemical classification. So Scott Halley, who's a world-renowned geochemist, has done the geochemical characterisation on all our rocks there. And that tells us we've basically got those exactly the same rocks as Carosue Dam. And it also gives us a lot of information about the alteration halos that sit around these systems. We now know these rocks are these felsic to, or intermediate to felsic volcanoclastic host rocks, which is the Carosue Dam host. We're seeing extensive sericite alteration, and sericite alteration, to see the widths of sericite alteration that we're seeing, that's telling us that there's been cubic kilometres of fluids going up that fault and along that system. So in those fluids, they contain low-grade gold mineralisation, and you find a structurally favourable zone for it to drop out. And I think that's what we've found at our new DMAG zone. We're also intersecting intrusive porphyries, which is always good to see. The fault interpretation is ongoing, but like I said, I'm very confident that there's a new area sitting on a north-south fault. And yeah, look, that's exactly what the Carosue Dam deposits sit on. We know a lot about the geology over there, and every one of those deposits sits on a north-south fault. So that's an important structural. Just on this new virgin discovery, there's no drill holes on this thing within 300 metres. So we've intersected it on 300 metre space lines. Obviously the middle one is the one that we've got our best intercepts out of it so far, which I've talked about before. And the other holes on the adjoining lines have also intersected significant mineralisation. So at the moment, you know, this is open at depth and potentially along strike. We do see a lot of arsenopyrite and pyrite mineralisation. It's really important, particularly the pyrite, because we know the gold mineralisation over at Carosue is associated with pyrite. So, and we're seeing, you know, like probably an order of magnitude of mineralisation in this new area above anything else that we've seen from our RC drilling, which gives me a lot of confidence that we have actually found something. That's that. So our plans for sort of this year, obviously, you know, we're going to be following up with diamond drilling. I used to be a drilling contractor in a former life, as well as a contract geologist. So we own our own diamond drilling equipment, which I've donated to Auzorum at no cost, because I'm that passionate about this project that I think it's going to deliver. So all Auzorum has to pay is fuel, wages, and diamond drill bit consumables. And we're able to do our diamond drilling for probably at least half of what commercial contractors are doing. But more importantly, it just gives us the flexibility of having a drill rig. It's extremely hard to get rigs in Kalgoorlie at the moment. And we've gone in there early with the diamond drilling, because basically diamond drilling is a key to understanding any structural complexity we might see, and actually having a look at the rocks and core is really important before you sort of start stepping out with RC drilling. So we've gone into this new discovery area with the diamond early. So I think that'll yield results for us later on. So over the next 6 months, we've got an RC rig booked to go into this new discovery area in 4 weeks' time. We'll be doing a lot of diamond drilling over at Mulgabee North, but at the moment, I think it's going to be focused on this discovery zone. And we've got more work to do with the air core drilling. We can keep following that relief shear. We've still probably got another 3 or 4 kilometres of that to systematically test. So there's lots of upside in this story. And yeah, I think Mulgabee North is really looking very exciting. Just really quickly on Patricia, I've left that a bit late. It's a high-grade gold project. It's on a granted mining lease, historically mined at 41 grams per tonne in the 1930s. We're targeting high-grade gold mineralisation there at depth. We did quite a lot of RC drilling over there last year. We've had some excellent results in our RC. It is structurally complex. We've drilled a couple of diamond holes over there, and we're just waiting on our structural consultant to have a good look at that core and take all the structural readings and get our lithologies right there. And it's a bit like a jigsaw puzzle, that one. It's taking us time, but I think once we understand the geology and the structural controls a lot better there, we'll be putting some deep holes into it that'll really unlock the potential of it. Obviously, we've got a number of really good intercepts there already. We'll see, we often see grades of, up around that 40 grams to the tonne, which sort of matches a historic underground mining grade. And yeah, we'll be back over there diamond drilling. I'm not sure when. Obviously, our focus is at Mulgabee North at the moment. Just on our what we're doing next year, well, this year I should say, for the next 2 quarters, more air core drilling, more RC drilling, more diamond drilling. So there'll be a strong news flow going forward, and we look forward to updating everyone as it goes along. And thanks very much for the opportunity to speak to everyone today.
Congratulations, Andrew Pumphrey. Well done. What do your kids do if your wife's a geo as well? Are they in mining as well?
One's doing geology at Curtin University now, and one's still at school.
You have a whole team. You'll have your own team exploiting this. Well done. Well, everyone, wrapping up. Don't